Welcome to the Deep Dive. Today we're tackling a really crucial part of modern business, the global shipping software market.
That's right. It's everywhere, even if you don't always see it.
Exactly. We've got a 2025 market report here as our guide. It's packed with forecasts, analysis, you know the drill. And our mission really is simple. Pull out the most valuable insights for you, cut through the noise, and just give you a clear picture of this, well, pretty dynamic industry.
Yeah, it's the engine behind how things get from A to B globally. And this report gives us a great snapshot of where it is now and, importantly, where it's heading.
So to kick things off, the report puts the global market size at, get this, USD 15.68 billion in 2025. That's already pretty substantial.
It is a big number.
But here's where it gets really interesting. They're forecasting some serious growth, hitting USD 31.7 billion by 2033.
Wow. Okay, so more than doubling.
Yeah, exactly. That's a compound annual growth rate, a CAGR of 9.20%. So what does that kind of growth rate, 9.2%, actually feel like in market terms?
Well, a 9.20% CAGR. That suggests really robust accelerating expansion. It means, on average, the market's expected to grow over 9% each year. And that builds on itself, which is how you get to that nearly $32 billion figure by 2033. It's strong, consistent growth.
And this isn't just happening out of the blue, right? What are the main forces pushing this?
The report points to a couple of key drivers. First, the growing need for this software to just seamlessly connect with all the different carriers, your FedEx, UPS, DHL, local guys, everyone all in one place.
Right, that integration piece.
Exactly. And second, there's a huge push for more automation across the board in logistics, really, from the warehouse right through to the final delivery, streamlining everything.
Okay, that makes sense. So let's dig a bit deeper into the geography. Where's the market strongest right now?
Currently, North America is definitely the leader. It holds over 37% of the global market share for 2025.
Over a third, okay.
Yeah, and that translates to a market worth about USD 5.8 billion, with a projected CAGR of 8.0% going forward to 2033.
And I'm guessing the U.S. is the bulk of that.
Absolutely. The U.S. market alone is estimated at USD 4.58 billion in 2025. Its growth is slightly lower, but still very healthy, 7.8% CAGR.
Okay.
But Canada and Mexico are important too. Canada's around USD 696 million, Mexico about USD 528 million. And their KGRs are actually a bit higher, 8.8% for Canada, 8.5% for Mexico.
Right. It tracks with the established e-commerce and logistics networks there. What about across the pond in Europe?
Europe's the second largest market. It accounts for just over 29% globally. Size-wise, that's USD 4.55 billion in 2025. And interestingly, the forecast CAGR is identical to North America's at 8.0%.
Huh. Interesting parity there. Any particular European countries standing out?
Yes, definitely. The UK is a major player, USD 763 million market size, and a strong 8.8% CAGR. Then you've got France, Italy, Russia, Spain, all significant markets, sort of in that $370 to $420 million range, with growth mostly in the 7-something% bracket.
So solid growth across the board there.
Yeah, and even smaller countries mentioned Sweden, Denmark, Switzerland, Luxembourg, they're also showing solid growth. It's pretty widespread.
It is fascinating that North America and Europe have such similar growth projections. Now, you mentioned the report points to an even faster growing region.
That's right. Asia Pacific. Now, its current share is smaller, around 24%, putting it at about USD 3.76 billion in 2025.
Okay.
But the growth forecast is, well, it's impressive, a KG of 12.1%.
Wow, 12.1%. That's really moving. What does that signify for, businesses listening?
Well, that explosive growth really signals a crucial shift in global shipping dynamics. If you're in this space, you absolutely need to be watching the infrastructure development, the changing consumer demands there. It might mean needing localized software versions or finding local partners to really tap into that expansion.
Yeah, the 12.1% is definitely eye-catching. What's fueling that acceleration?
It's primarily just the booming e-commerce scene across the whole region, plus increasing cross-border trade volumes. China is, unsurprisingly, a massive factor. It's got a USD 1.58 billion market already and an 11.6% CAGR.
Huge.
But what's really remarkable is India. Smaller market size for now, about USD 376 million, but the highest CAGR in the region, maybe even globally in this report, at 14.0%.
14%. Okay, that's incredibly dynamic.
It really signals huge potential. And it's not just them. Japan, South Korea, Australia, Singapore, Taiwan, they all have substantial markets and healthy CAGRs contributing to that strong regional picture.
Right. Wait, let's cover the other regions. What about South America?
South America holds a bit over 3.8% share, market size around USD 596 million in 2025, and a pretty strong CAGR too, 9.6%.
Higher than North America and Europe then.
Yeah, slightly higher growth rate. Brazil's the largest market there, USD 255 million, growing at 10.2%.
Yeah.
And Argentina actually has the highest growth in the region, 10.5%, with a market around USD 100 million. Colombia, Peru, Chile are also mentioned as contributors.
Got it. And the Middle East and Africa, often grouped. How do they stack up?
The Middle East is around 4.0% of the global share. That's about USD 627 million market size in 2025, growing at 9.7% CAGR.
Also strong growth.
Yep. Saudi Arabia leads there, USD 220 million, 10.0% CAGR, followed closely by the UAE, about USD 129 million, but slightly faster growth at 10.2%. Qatar, Turkey, Egypt are also in the mix.
And Africa.
Africa holds the smallest share currently, around 2.2%. That's a USD 345 million market, growing at 8.9% CAGR. South Africa is the main market highlighted, USD 121 million, growing quite fast at 9.8%. Nigeria is also mentioned as having potential.
Okay, so a really global picture. But the big headline is definitely North America leading now, but Asia Pacific just charging ahead in terms of growth.
Precisely.
So looking at components first, the report says software itself is expected to dominate the market share.
Exactly. Yeah, I mean, these are the digital tools you need for managing logistics costs, for automating processes, getting that real-time tracking everyone wants now.
Right. But what about the services around the software? Implementation, support.
Well, interestingly, the report flags services as the fastest growing segment within components.
Oh, okay.
Which suggests that as more businesses adopt this software, they realize they also need help. You know, support for implementation, customization, just keeping things running smoothly. The report specifically mentions professional services, think consulting, integration, and managed services, which is more like ongoing support and updates.
So it's not just buy and go. There's a growing ecosystem of support needed. What about how it's delivered? Deployment methods.
Cloud deployment holds the biggest share right now, and that's down to the usual cloud advantages, right? Scalability, easy to grow with the business, affordability, often subscription-based, and remote access, managing shipping from anywhere.
Huge benefits, especially lately. But is everything moving to the cloud? Are on-premise solutions disappearing?
Not entirely, no. The report notes there's still demand for on-premises solutions, often from larger organizations, maybe in finance or healthcare. Industries with really strict data control or security needs, they want that extra layer of control.
Okay, that makes sense. So flexibility, but also options for control. Now, who's using this stuff? The applications.
Right. Looking at applications, the retail and e-commerce sector holds the largest market share.
No surprise there, I guess.
Not at all. It's driven by, well, the explosion in online shopping and the constant pressure on retailers to satisfy customers with fast, transparent shipping and fulfillment.
Absolutely. Which application area is growing fastest then?
The report identifies courier and postal services as the rapidly growing category, again, tied to that demand for efficient, reliable, on-time delivery, driven by e-commerce but also B2B needs.
Okay.
It also briefly touches on 3PL's third-party logistics providers, the companies that handle warehousing and distribution for others, and freight cargo forwarding as other key areas using the software.
So it's powering everything from, getting my online order to my door to massive global freight movements.
Pretty much, yeah. It underpins a lot.
Now, the report also gets into the why behind all this, the market dynamics, drivers, restraints, trends. Let's start with the drivers. What's really pushing this market forward?
Okay, a big one is the demand for real-time monitoring. Everyone, businesses, and customers wants to know exactly where that package is right now.
Yeah, that tracking expectation is huge now.
Totally. And this involves integrating tech like GPS for location, but also AI analytics, predicting delays, optimizing routes on the fly, and even IoT sensors, little devices on shipments, monitoring temperature, humidity, shock, whatever's needed. More data, more efficiency.
That level of visibility must be crucial for complex supply chains. What else is driving growth?
The demand for contactless delivery. That got a massive boost during the pandemic, obviously, but the convenience factor means it's sticking around. Shipping software is key to enabling that automated dispatch, digital proof of delivery, customer notifications, all that. And finally, just the general demand for mobile-friendly options. People want to manage shipping tasks on their phones or tablets, so the software needs to be accessible and easy to use on the go.
All very current, relevant forces.
Yeah.
What about the flip side? Any headwinds or restraints mentioned?
Yes, the main restraint highlighted is the variability in shipping prices.
Yeah. Fuel costs, labor.
Exactly.
Really?
Fluctuating labor costs, fuel prices jumping around, changing regulations. It makes it hard for businesses, especially, SMEs, smaller companies, to predict their shipping costs accurately.
And that makes them hesitant to invest in new systems.
And it can, yeah. If your core costs are uncertain, it can definitely make you pause before committing to new software investments.
Understandable. Okay, so what about major trends shaping the future here?
Well, one clear trend is the move towards subscription-based models for the software itself. SaaS, basically.
Like we see in lots of software now.
Right. It offers more flexibility, usually lower upfront costs, and often includes automatic updates and support, which businesses like.
Makes it more accessible.
Yeah. Another key trend is increased focus on compliance, adhering to shipping rules and regulations. Global trade laws are complex and always changing. Shipping software is becoming almost essential just to navigate that complexity, ensure you're compliant, and avoid costly penalties or delays.
So software is becoming a compliance tool as much as an operational one. Interesting. Finally, then, the competitive scene. Who are the big names?
It's described as a fiercely competitive market. Lots of players, big and small, all focused on, automation and that multi-carrier integration we talked about.
Any specific companies highlighted?
Yeah, the report calls out names like ShipStation, Shippo, EasyPost, Pitney Bowes, MetaPack as key players.
Okay, familiar names. Any recent moves or news mentioned?
A couple things. Pitney Bowes apparently launched something called Ship It Sell in September 2024, a digital platform aimed at simplifying e-commerce shipping.
Okay, recent.
Yeah. And Aroma Retail, a company, adopted a solution from Descartes Systems Group in November 2024 to help with their e-commerce. Also, Descartes acquired ShipTrack back in November 2020, so you see some consolidation happening too. Strategic moves.
Right, acquisitions and new product launches.
Yeah.
Typical signs of a dynamic market. Did the report list other significant companies?
It did provide a longer list, yeah. Let's see. Logisticakes, Aftership, Descartes again, EasyPost, Interactive, Jolly Technologies, Cubix, Manhattan Associates, Mechalux, Metapack again, Oracle, Ordoro, Pitney Bowes again, ProShip, SAP, ShipHawk, Shipping Easy, ShipStation again, WebGility, XPS Parcel. It's quite a mix.
Definitely a crowded field.
Yeah, established tech giants alongside more specialized players.
So to kind of wrap this all up, what's the core message you took away from this deep dive into the shipping software market?
I think the main takeaway is just this picture of significant ongoing expansion. It's really fueled by e-commerce continuing to boom, the absolute need for more automation in logistics, and that demand for real-time visibility all the way through the supply chain.
And that standout growth in Asia Pacific.
Absolutely. That's particularly striking. It really suggests where a major center of gravity for this industry might be shifting towards in the coming years.
A truly dynamic sector, lots happening, lots of potential. And on that note, maybe a final thought for you, the listener, to ponder. As global supply chains just keep getting more complex and technology races ahead, how might shipping software need to evolve beyond what it does now? What new capabilities will be needed to tackle the logistical challenges and maybe the opportunities of the future?
Good question.
Definitely something to think about. Thanks for joining us for this deep dive.